Okay, so in the previous videos, in the previous video, we learned that in order to get rich, you must focus your efforts into acquiring income-generating assets, reduce liabilities, and keep expenses low. Simple as that. Here are other minor things that I highlighted while reading. Money only accentuates the cash flow pattern running in your head. If your pattern is to spend everything you get, an increase in cash will likely result in an increase in spending. Financial aptitude is what you do with the money once you make it. How to keep people from taking it from you, how to keep it for longer, and how to make that money work hard for you. Most people follow the crowd. They do things because everybody else does them too. They confirm rather than question. An intelligent person hires people who are more intelligent than he is. For this video, we're going to be looking into Chapter 4, the history of taxes and the power of corporations. So, Chapter 4 talks about how originally in England and America, there were no taxes, but there were occasionally temporary taxes to pay for wars. But in 1874, England made income tax a permanent levy on its citizens. And in 1913, income tax became permanent in the United States. Initially, taxes were only levied against the rich. The idea of taxes was made popular and accepted by the majority by telling the poor and middle class that taxes were created only to punish the rich. This is how the masses voted for the law, and it became constitutionally legal. Although it was intended to punish the rich, in reality it wound up punishing the very people who voted for it, the poor and the middle class. Because once the government got a taste of money, its appetite grew. The masses believed in the Robin Hood theory of economics: take from the rich and give to everyone else. The problem was that the government's appetite for money was so great that taxes soon needed to be levied onto the middle class, and from there it kept trickling down. The socialists ultimately penalized themselves due to their lack of financial education. No matter what the take from the rich crowd came up with, the rich always found a way to outsmart them. That is how the taxes were eventually levied onto the middle class. The rich outsmarted the intellectuals solely because they understood the power of money, a subject not taught in schools. So, every time people try to punish the rich don't simply comply. They react. They have the money, power, and intent to change things. They don't just sit there and voluntarily pay more taxes. Instead, they search for ways to minimize their tax burden. They hire smart attorneys and accountants and persuade politicians to change laws or create legal loopholes. They use their resources to effect change. Today, the average American works 4 to 5 months for the government just to cover their taxes. So, yeah, the same people who voted for taxes are now suffering from it. And the one that taxes were intended for, the rich, are now the ones who pay the least amount of taxes. Because because they actually take the initiative to educate themselves about these things. Unlike the middle class or the poor, they find better ways to do things. They don't just sit there and voluntarily pay more taxes or get pushed around. For example, Section 1031 of the Internal Revenue Code allows a seller to delay paying taxes on a piece of real estate that is sold for a capital gain through an exchange for a more expensive piece of real estate. Real estate is one investment vehicle that has a great tax advantage. As long as you keep trading up the value, you will not be taxed on the gains until you liquidate. People who don't take advantage of these legal tax savings are missing a great opportunity to build their asset columns. And most of these vehicles are available to anyone, but it's the rich who find them because they are minding their own business. They are taking the initiative to educate themselves about all these things. Another thing that the rich use are corporations. A corporation is a legal document that creates a legal body that allows the income rate tax rate of the corporation to be less than the individual income tax rates. In addition, that certain expenses could be paid by a corporation with pre-tax dollars. So it earns its money, spends everything it can, and is taxed on anything that's left. While normal people, they earn their money, they are then taxed on what they earn, then they spend on anything that's left, if anything is left. These vehicles or methods are all out there, but it's only the rich who find them because they're minding their own business. What I mean by this is that they are focusing on their assets, unlike the poor or the middle class. They are trying to educate themselves because knowledge is power, and with money comes great power that requires the right knowledge to keep it and make it multiply. Without that knowledge, the world pushes you around. The biggest bully was not the boss or the supervisor, but the taxman. The taxman will always take more if you let him. The first lesson of having money work for you as opposed to you working for money is all about power. If you work for money, you give the power to your employer. If money works for you, you keep the power and control it. So make money work for you. Also, it's expensive not to know the law, so make sure you learn about that too. Thank you. This is the end. Hope you found some value in today's video.